Hey everyone, I'm Cary Smith and I'm sitting here with Cheri Turner.
Hi, everyone.
And Cheri and I are both with Client First Capital. And today we're talking about the one event that can totally derail your retirement plan. And that event, if it's not planned for and a part of your retirement plan, is long-term care.
Mhm.
And so, Cheri, this is a topic that is just very important to me.
Yeah.
Um, in my before I was an executive in financial services,
Mhm.
but prior to being executive, I actually sold long-term care insurance and helped families. And I've personally helped hundreds of families prepare for long-term care expenses. And
Mhm.
then, as an executive in financial services, although I was assisting with financial planning and advice and retirement planning, I also was responsible for the team that did long-term care planning. So, in that role, I've been a part of thousands of families in preparing for expenses for long-term care.
Mhm.
So, I do know a lot about this subject, but it's not that I know a lot. It's more about I understand how important it is, how
Right.
expensive it is, and how stressful these events can be for families. And having some type of plan in place ahead of time can
Yeah.
reduce a lot of that stress.
Absolutely.
And
Yeah.
then I know you know this, but this video is very timely. Um, Today, my sisters and I are working on finding a facility for my mom, and it's been a stressful couple of days.
Absolutely.
And although in working with my sisters on my mom's health condition, I think there's been more tears from my sister
Mhm.
um, around the stress
Oh, right.
than there has been around just the condition that my mom's in.
Yes.
And my wife and I purchased about 20 years ago a long-term care policy for my mom. And I knew when she got to the point that she needed care, she would more likely rely on my sisters to
Mhm.
to provide that care rather than me. And
Right.
so our contribution is to have this insurance policy so that my sisters can oversee the care, but they don't have to actually deliver the care.
Right.
And so they're and then we have assets, and we actually have a very generous long-term care policy to be able to cover some of these expenses.
Mhm.
And so anyway, it's very timely. I'm looking forward to this topic, but I'm going to let you lead us through the bullet points. I'll have, as always, plenty to add and plenty to say.
Absolutely. Great. Great. Yeah. So as you said, that number one thing that can derail your plan is long-term care. And medical expenses in general tend to be the one thing that people underestimate the most when it comes to their retirement planning. And for a lot of us, especially people who have not hit retirement yet, we kind of think forward and we just assume that Medicare is going to cover everything. Once we hit 65, then we're good, we're covered. However, at the end of life, there are quite a number of services that come under that heading of long term care that are not covered by Medicare and will not be. So, really, it's about planning for and allowing for the planning of those types of things. Things like in home care, having somebody come in and give specialized care, assisted living homes, nursing facilities. And then there's, of course, the specialized medical care, things like the memory care, places like that. So, anytime essentially an individual is considered to be short-term rehabilitative care, that's when Medicare is going to be there. It's going to cover those expenses. But when it becomes long-term, or when it becomes no longer rehabilitative and the individual is not expected to necessarily survive, then that's when our long-term care needs really kick in. According to the Department of Health and Human Services, about 70% of individuals over age 65 will need some form of long-term care. So this again is why it's so important to make sure that we plan and make allowances for that. The most common way to plan for this, which you alluded to, Cary, is by purchasing long-term care insurance. So long-term care is there to cover those specific needs when you're not able to meet your daily living behaviors. And so that's when that will kick in. There's certain factors that you want to be sure to consider when you're looking for a long-term care policy. You want to consider, of course, the coverage terms. How much is it going to pay? How long will it pay for? Is there a period of time before it kicks in? Any waiting periods, things like that. You want to also consider the premium costs. In general, long-term care does tend to be very expensive, which is, again, why it's important to do it early. The younger that you get the policy, the lower the premiums will be. Another thing is, if you wait until later on, depending on how old you are when you apply, not only will the premiums be higher, but if you have certain medical conditions, you might actually be turned down. So it's one of those things really, really good to get started early on and get into place and set early.
Yeah, well said. The younger you are and the healthier you are, the easier it is to get long-term care insurance. But there's it can be expensive, but in my experience, and I've calculated premiums, thousands of times, typically a couple can be insured for less in an annual premium than it will cost for one of them to be in a facility for 1 month. And
Wow.
and so the insurance value, it has good insurance value, a very
Yes.
low dollar outlay now for a huge benefit later. And so there is good insurance value in most long-term care insurance policies.
Yes, absolutely. Absolutely. And with regard to those policies, one thing that you do want to look for is an inflation type rider, inflation protection, to
Mhm.
ensure that when you do need to use that benefit, that it has continued to increase with inflation and will be substantial enough to provide the relief that you need. Another option is there are types of hybrid policies out there, such as a life insurance policy that you can borrow against for your long-term care. And so essentially in the end, when the death benefit pays out, it is minus that loan essentially that was taken out to be able to provide for your long-term care. So there are some types of hybrid policies out there that you can look at as well.
Yeah,
Um,
all of those are good options. And one of the things that's nice about the long-term care market, there's long-term care insurance plans that are highly customizable. There's long-term care life insurance, and so there's a lot of options. And it's hard to say for one person what the best option is for them. Can depend on a lot of factors. But this is where you want to work with a long-term care expert that understands all the different options.
Right, absolutely. And so for individuals who can't afford the long-term care policies, and don't have the funds to pay for it themselves, a lot of individuals do end up relying on Medicaid to help pay for long-term care at end of life. However, if an individual is anticipating that this might be their situation, this is a very strategic planning process, because with Medicaid, there's a 5-year look back period that looks at your assets and what happens with them over that period of time. So there's really truly a process of essentially spending down the assets to the legal requirement limit, which is slightly different depending on if you're married or single. But the asset limit is quite low. They do allow you to keep your personal home, and a vehicle, your personal possessions, things like that. But as far as maintaining any level of wealth, the idea is that Medicaid is there to cover those individuals who cannot afford to pay for it themselves.
Yeah, Cheri, if a person has assets and they have means, they're the best path, I believe, is to plan with long-term care insurance or something of that nature. And Medicaid planning can get very difficult, especially if you're leaving a healthy spouse behind, right? You have to really deplete those assets.
Right.
And although they can keep the house, they don't have a lot of assets left to maintain it, and it can get very tricky. But if you truly are out of assets and don't have a lot, Medicaid planning is a very good strategy to make sure that you can receive the care that you need.
Yes, yes. And then, as we alluded to earlier, the third option is sort of what we call self-insuring, or setting aside assets for those long-term care needs. There's a number of ways that individuals can go about doing this. A number of people have health savings accounts. And so by contributing to that, those funds can be used for eligible medical expenses, which would include that long-term care. Things like reverse mortgages. So for individuals who get down to end of life, maybe they don't have a lot of cash on hand, but they have a lot of value still left in their home. but they want to be able to stay there. So things like a reverse mortgage can help them be able to pull some of the equity out of the house to be able to afford the long-term care and allow them to be able to stay home during that time as well.
Yeah, Cheri, there are a lot of really good options if you're just gonna pay for it out of your own assets.
Mm-hmm.
But it's not good enough, I don't believe, to just know I'll pay for it, I have enough money.
Right.
It's important to put it into your financial plan and know what those costs will be. When do you think, looking in the future, might be a likely time that you would incur those costs?
Mm-hmm.
What impact will it have on your long-term financials? And all of this can be done with some good retirement planning and forecasting.
Yes.
But it's probably best not to wing it and to actually have a plan
Yes.
on what kind of assets is it going to require and where's that money going to come from in your asset pool.
Right. And as you kind of alluded to earlier, Cary, with the discussion of the stress around the situation,
Mm-hmm.
Knowing, regardless of which route you take, but knowing that you have a plan in place kind of just means, okay, well, when this happens, then I this, and it helps to really alleviate a lot of that stress because you kind of already pre-planned what your next step will be.
Yeah.
So there are a few tax considerations around long-term care planning. We mentioned earlier that the premiums can sometimes be tax deductible. If you do itemize and you are claiming medical deductions, then it can be deducted with that. In addition, if you do take any withdrawals out of any retirement accounts during that time, for any healthcare expenses, you need to be aware that you probably be paying taxes on those if they came out of any pre-tax accounts. And then again, being aware of any asset transfers in that last 5-year period that we discussed with the Medicaid, and being careful of what you're doing and not creating any tax penalties through that time.
Yeah.
Wow.
Okay, Cheri, you've covered a lot of good points. So anything else to add before I jump into the final thoughts here?
I think the biggest thing I would say is just don't wait, regardless of which path you take, take the first step and take the step forward and get started.
Yeah. So Cheri, thank you. You did a good job of covering these topics. There's so much to know in this space. And so, if you're watching, I just, long-term care planning is retirement planning, or at least it's a big piece of it, and it's an important step. And unfortunately, it's a step that most of us are going to be confronted with at some point, right? And for myself and most of us, we don't have to look very far to see it happening, right? Typically, we can look at our parents or aunts and uncles or grandparents and see people that have had to go through this, and people, I believe, have an idea of how devastating it can be. So, but let me just add, if you like this topic, give us a thumbs up. It helps other people, get to view this type of video and these types of topics. Also, if you want to talk to someone about long-term care or retirement planning or financial planning or tax strategies, you can reach out to us at clientfirstcap.com. And from there, you can sign up for our newsletter. We have a link to all of our videos, or if you want to meet with someone, you can request an appointment or give us a call. Hey, thank you for joining us, Cheri. Good job.
Thank you. Have a great day.
See you.